Hi guys, so for today's lesson we are doing sorry about that. I was saying that for today's lesson, I just want to say first, please go to YouTube because that's where the clear, what's this? You can see everything clearly. I'm just sharing it here so that you know you need to go to YouTube. So what was I saying? So this is, I think, EC exams September last year. Let me just quickly check. Yes, this is last year. Okay. So I wanted us to just go over this, and if you have any questions, you can always drop them in the comment section. Or if you want to ask about anything else that's not in the paper, but you just have a general accounting question. So the first start here with some theory questions for question 1.1. This says choose the correct word or term from the list given which best suits each statement below. Write only the word or term next to the question numbers in the answer book. Okay, so the first one says investments such as fixed deposits over a 3-year period. So what would we call that? That's a financial asset. First answer is financial asset. Okay. Then our second question asks us to, what's this? Expresses an unbiased opinion on the reliability of financial statements. That would be an independent auditor, since they're unbiased. Independent auditor. Okay, then the total of ordinary shareholders' equity and non-current liabilities, that is capital employed. And finally, debt to be settled within 12 months, that is a current liability. Okay. Then we move on. For question 1.2, they say 1.2.1 refer to information B1, and they tell us that the information relates to the financial year ended on the 28th of February 2025. The business sells luxurious electrical items. Yeah, so let's go see. Said refer to information B1. So it says here on information B1 on 1st December 2024, an old vehicle, an old vehicle was traded in for a new vehicle at 180, valued at 180,000. The trade-in value received was 125,500. And then the amount received was recorded, but no further entries were made regarding the sale and depreciation. The details of the vehicle sold on 1st March 2024. This was the carrying value on the 1st of March 2024. And then we told depreciation on vehicles is written off at 15% on the diminished balance method. Now, let's see, this asked us to calculate the profit or loss on the sale of the vehicle. So profit or loss on sale of vehicle, that has to do with your proceeds, meaning the money or the value you are getting for selling this asset, minus the carrying value of the asset at the date of sale. So we need to know our proceeds and we need to know our carrying value at the date of sale. So we are told here that the trade-in value received was 125,500, meaning for us trading in our vehicle, that's how much we got. But we didn't get that in cash. It was used to buy the new car. So our proceeds, we already know them, equal to 125,500. Okay. Then the next part we need to calculate is the carrying, what's this? The carrying value on the date of sale. We are told this happened on 1st December 2024, right? So at the beginning of, no, sorry, not at the beginning, during the year. And we are given the carrying value at the beginning of the year. We don't know what the carrying value is at the end of the year. So that means we need to calculate depreciation for the current year and then have the carrying value for the date on the date of sale. Sorry. Yeah. So we need the carrying value on the date of sale. You have the carrying value at the beginning. Excuse me. So we need to calculate that. So depreciation on vehicles, we're told, is written off at 15% on the diminished balance method, meaning, sorry, meaning we take the carrying value multiplied by the percentage rate, and then we prorate if we sold something during the year, not we didn't have it for the full year. So what happened here? Our carrying value is 148,000. I'll just put it here, 148,000. Then we multiply by 15%. So we sold this on the 1st of December 2024. So that means we had it from March 2024 up until the 1st of December 2024. This would be a good time to draw a timeline if you prefer that, but let's just count the months. So it was March, April, May, June, July, August, September, October, November. We don't count December because it was sold on the 1st. So we multiply by 9/12, and that will tell us what our depreciation for this vehicle is. Okay, so we have 148,000 multiplied by 15% multiplied by 9/12. And that gives us 16,650. Okay, so now to calculate then our carrying amount, we would say our carrying amount is equal to the 148,000 we had at the beginning minus this depreciation for the year of 16,650, which will then equal 148,000 minus 16,650, which then give us 131,350. And so now we have our proceeds, and we also have proceeds, and we also have our carrying value or carrying amount. So we'll just say 125,500 minus 131,350 equals to 5,850. And that's a loss on sale of asset because our answer will be a negative. Okay, and we carry on. The next question says, calculate the value of closing stock of electrical plugs using the weighted average method. Okay, so let's see, what were we given? Which information are we supposed to be looking at? Okay, information B6. Okay. They gave us the following stock sheet relates to electric plugs. It was omitted when the final stock figures were calculated. And then they've given us all this information. We have 1,250 units left. And then we're being asked to use the weighted average method to calculate the value of this closing stock. Okay, so in order to calculate the value of, what's this, your closing stock, you need to calculate the total value of stock available for sale divided by the number of units. So we had at the beginning of the year opening stock with a value of 174,400 plus purchases in May of 501,400. Okay, let me just get a little closer. So 174,400 plus 501,400, and then September 440,000. Okay, let's see if there were any returns. Then we were told that stock sent back by supplier from May purchases, the refund includes transportation. So we sent back stock from May, and we're told we sent back 100 units. So we need to calculate that. So 100 times the unit price of 218. So 218, we'll be subtracting the returns. So 218 times 100 will give you times 100 will give you 21,800. So we subtract that 21,800. Then we divide by the units. So our opening was 800 plus May, which was 2,300, plus September, which was 2,000, minus the returns, which were 100, equals okay, so input all of that into our calculators. Okay, so I'm getting 214.93. I don't think I'm missing anything. So 174,400, 501,400, and 440,000 minus 21,800 divided by 800. Wait, this is supposed to be 100, not 10. Okay, give me a second. So it's 218. That'll be 218.8. And then to calculate then our closing stock, that'll be 218.8 multiplied by 1,250, which will give us 273,500. And that's our final answer. Okay, questions? Excuse me. Okay, so we continue. The next question says Use the table to calculate the correct net profit after tax for the year ended 20th February 2025. Use plus for increase and minus for decrease at each adjusted amount. Okay, so let's go over our information. So we were told the net profit before tax of 3,825,850 was calculated before taking the following into account. So we have on 1st December 2024, we have the old vehicle that was traded in for a new vehicle valued at 180,000. And we're told that the amount received was recorded, but no further entries were made regarding the sale and depreciation. So let's start with the sale. We'd already calculated in the 1.21, I think, we'd already calculated that there's a loss on the sale of asset. Sale or disposal of asset, and it was 5,850. So that's minus 5,850. Then we need to also account for depreciation. So the depreciation of the vehicle that was sold, we calculated that 16,650. And then we need to calculate the depreciation for the new vehicle as well. Okay. So the new vehicle was valued at 180,000. So, and we bought it on the 1st of December 2024. So it depreciated December, January, February. So it depreciated 3 months. So then we will say 180,000 multiplied by 15% multiplied by 3 divided by 12, which will give us 6,750. Okay, let me just write that down. So for depreciation, we have 180,000, the new vehicle, times 15% times 3 over 12. Gives us 6,750. Okay. So now we add those two together, 16,650 plus 6,750. Which is, depreciation is an expense, so we subtract that, minus 23,400. Okay, then we go over to the next adjustment. It says here that creditors with debit balances of 10,550 on 28th February 2025 must be transferred to the debtor's ledger. Okay, what this is telling us is that we had people that we owed and we overpaid them. So now they owe us, so they're no longer creditors. They are now debtors because they owe us. So now we need to move their debit balances in the creditors' ledgers and take them to the debtors. We need to remove them as creditors and make them debtors. Okay. So now they currently have a debit on their creditors' ledger. So how do we remove that? We remove that by crediting their creditors. So if they have a debit of 10,550, we need to credit 10,550 under creditors control, right? And then what do we do with debtors? Under debtors now, we are going to debit that 10,550. This was already recorded. This was a balance that was already recorded under creditors. Now we're just moving it here. So we credit creditors and debit debitors in order to move it. So now that will increase debtors control by 10,550. So yeah, plus 10,550. So we need to calculate the new debtors. It will be 688,200 plus 10,550. That'll be our new debtors amount. Debtors control. 688,200 plus 10,550 which is 698,750. And so the question says provision for bad debts should be adjusted to 4% of debtors. Okay, so now we need to calculate 4% of that amount. So that would be 698,750 multiplied by 4%, which will then give us 27,950. That is the new provision for bad debts. And then the old provision for bad debts was 30,450. So that means our provision for bad debts has decreased. It went from 30,450 at the beginning of the year to 27,950 at the end of the year. So now this difference, which is a decrease, we would record it under income. So that means here we'll have to record it under as a plus, sorry, as a plus. So let's write down the provision for bad debts adjustment. Okay, let me just write it here. Provision bad debt adjustment will now be equal to 30,450 minus 27,950. Which is 2,500. A plus. Okay, next adjustment. Sorry. Says the company donated goods to a local orphanage. Gross profit of 12,000 was going to be made had these goods been sold. The company uses a markup of 80% on cost. And so now we need to calculate what the donation was. So adjustment 3, donations. Okay. So now a donation is not a sale, so we can't use the gross profit to record the donation. We need to record the donation at what's this? Gross profit. We need to calculate the cost of the goods that were donated because they were not sold. So we can't use the sales price. We can't use the gross profit for it. A sale had not occurred. So 1, 2, 3. What do? We have gross profit of 12,000. We are looking for, say, what's this cost? Cost is 100%. And then gross profit is a markup of 80%. So we say 12,000 times 100 divided by 80, which will then give us 12,000. 15,000 is our answer. And that's a minus 15,000 because we lost out on sales by making the donation. So that's an expense in a way. Number 4. Advertising includes a 6 months premium of 18,600 paid on the 1st of November 2024. So like we said, our year starts on the 1st of March and ends on the, what's this? It started on the 1st of March and ends on the 28th of February the next year. So 1st March 2024 ending on 28th February 2025. And this premium was paid on the 1st of November 2024 and it's for 6 months. So that means if it's 6 months, that's November, December, January, February, March, April. So 30 April 25. Like we said, our year ends here. So then this 6 months in advertising that we paid, it exceeds our year. So we need to, the rest of it is a prepaid expense. So after February, which means March, April, those 2 months are not part of our current year, so we need to calculate that. So what do? The premium is 18,600, so we divide that by 6 to get the premium per month, and multiply by 2 for the 2 months that were, what's this? Let's just multiply by 2 here. Multiply by 2 for the 2 months that need to be removed from the current year, which will give us 6,200. Okay, we continue. So that was advertising. Advertising. And it's a wait, okay. It's going to be a plus. Now the reason why it's going to be a plus, the reason it's going to be a plus, think of it like this. Okay, what am I saying? The reason it's going to be a plus is because advertising, when it was recorded, it would have been subtracted because it's an expense. But now we're saying this is not part of the expense, so we need to add it back. Hope that makes sense. So we add 6,200. Okay, where was I? Number 5. A debtor who had been previously written off transferred 4,500 via an EFT. Okay, so this is what we call bad debts recovered. So that would be part of our income. Bad debts recovered, we add it as part of our income. Okay, so let's go. Part of income. So bad debts recovered. Plus 4,500. Then 6. Okay, 6. What did they tell us with 6? We told it was agreed to increase rent by 5% on 1st December 2024. According to the agreement, a deposit of 8,000 is paid before the tenant occupies the building. The deposit was received but not recorded. Rent for March 2025 was received and recorded. The lease agreement starts from 1st May 2024. Okay, so let's start here. When it comes to the deposit is not part of your income and expenses. When we receive that deposit, it's like, okay, we know what deposit is to secure your apartment. And then if anything, when at the end of the lease, if you've done anything wrong, to use that deposit to cover the stuff that you've done, right? Now, or you get it back. So that would be recorded as part of our liabilities. It's not an expense and it's not income. Okay, so it's not going to affect our net profit. Then we get to the rent itself. We're told there was an increase of 5% on the 1st of December 2024. And that, according to there was an increase of 5% on 1st December 2024. And then we are told the rent for March 2025 was received and recorded. Okay, and the lease agreement starts from 1st May 2024. So now we are trying to calculate what our rent income is. Deposit of 8,000. Then let's just see. Rent income was 216,000. Okay, so how many months do we receive rent from? The lease agreement starts from 1st May 2024. Da-da-da. Okay. So we need to calculate what is the rent for March, and we need to remove it. Okay. Increase on the 1st of December. Okay, we need to draw a timeline. Our year starts on the 1st of March 2024 and ends on the 28th of February 2025. We receive rent up until the 31st of March 2025. There was a rent increase on the 1st of December 2024. The lease started on the 1st of May. Yes, 1st of May 2024. So going by that, cancel. So going by that, this is when we start counting. Okay, so that would be May, May, June, July, August, September, October, November, December, January, February, March, which gives us 11 months. Okay, so we have 11 months of rent received, plus the deposit. But the rent itself is just the 260. Okay, and then we told from here there's a 5% increase. So from December up until March, we have a 5% decrease. So that's how many months? December, January, February, March, which is 4 months out of the 11. Okay. So just give me a second. I know there are different methods, so I'm trying to see which is the easiest one that I can use. Okay, so for 4 months, there's that plus 5%. And then for the other months, we were just paying the full 100%, which is 4 minus 11, that's 7 months. So 7, we're paying 100%. But for 4 months, we're paying 105%. So 4 times 105, that will give us 420. Okay. Which in total is 1,120% in a way. Okay, so that's 1,120%. Okay, let's go back to the question. Say the rent income is 216,000, and then we had the deposit of 8,000. So that would be 216,000 plus 8,000. Then the rent on March has the 105%. It's the 105%. So we multiply by 105 divided by 1,120. And that'll give us the rent amount. Okay, sorry my work is all over the place. It will be 21,000. So rent income is minus 21,000 because it's not part of this year. That was adjustment 7, 6 didn't affect anything. Okay. Then we were told that 130,000 was still owed to SARS for income tax on the 28th of February 2025. So we need to calculate what was income tax. Okay. Because it wanted us to calculate net profit after tax. Okay. So we told that we're still owing that amount, and if we look at the trial balance of the totals, we're told that we've already paid, there's a provisional tax payment of 870,000. So we've already paid 870,000, but that was not enough. We still owe 130,000. So then how much in total do we owe? The amount we've paid and what we've already owed. So that would be 870,000, which is the provisional tax payments, plus what we still owe of 130,000. And that will give us 1,000,000. And we subtract that because income tax decreases our net profit. 1,000,000. Okay, so now we calculate our net profit after tax. So we start at the top, 3,825,850 minus 5,850 minus 23,400 plus 2,500 minus 15,000 plus 6,200 plus 4,500 minus 21,000 minus 1,000,000, which will then give us 2,773,800. Okay. So we'll just stop there today with question 1. And then for the next lesson, we'll just continue with the statement of financial position. And let me just, yeah. So this is the paper. If you go to EC exams website and you go to September 2025, you'll find it there with the memo and everything. And then if you have any questions, you can drop them in the comment section or on the TikTok, wherever you can get to. Thank you for joining.